Hello and welcome to Gotstockz. Today is Monday, March 31st, 2025. We are going to take a look at the Dow Jones Industrial Average. We're going to look at some volume analysis. We are also going to take a look at some technical analysis. Seems like everybody is getting bearish on the stock market. And from my experience, I've learned that when the mass majority of the people become bearish, well, they are the contrarian indicator. And it goes for the same when they are completely bullish. That means we're due for a correction. I respect and appreciate your time, so let's get right into it. The Dow Jones Industrial Average ended up today 417.86 today. The Dow Jones Industrial Average is a stock market index of 30 prominent companies listed on the stock exchanges in the United States. The Dow Jones Industrial Average is one of the oldest and most commonly followed equity indices. Now we're going to take a look at the top 10 holdings in this index. We are looking at the top 10 holdings. This is the DIA. This is the Spiders Dow Jones Industrial Average ETF Trust. It's currently trading at 419.88, up 4.26. That's equivalent to 1.02%. These are the top 10 holdings, 54.32% of total assets. Here we have the top 10 holdings in the Dow Jones Industrial Average. We have Goldman Sachs, United Health Group, Microsoft, Home Depot, Visa, Sherwin-Williams, Caterpillar, McDonald's, Amgen, and American Express. And you can see on this side here shows you the percentage of assets of the weight that's in the Dow Jones Industrial Average of these holdings. Now let's take a look at the sector weightings. We're going to look at the percentage ratio. The financial services is going to give us 25 and change percent. Technology is going to give us 19 and change percent. Healthcare is 14%. Consumer cyclical is 13.9%. Industrials is 12%. Basic materials is 5%. Consumer defensive is going to give us 4.82%. Energy is going to give us 2.2%. And communication services is going to give us 2.20%. Now let's get out of here and we're going to go to the charts. Dow Jones Industrial Average. As you can see, this chart here goes back to 1995. And if you stayed in the market and you dollar cost average, you invest every week in your 401k or your Roth or bi-weekly or monthly, that you would have done very well. And going forward, the market tends to repeat itself. I think you'll be in good shape in the long run. What we're going to take a look at is the 52-week range is 37,600 and change is the low, and the 52-week high is 45,073 and change. Now the average daily volume is 607,900,000, and today's volume is 731,354,000, and I'm going to show you why that's important when we get to the charts, because that is telling us a story here. Forget the news, forget the noise, forget the political jargon that's going on, and the reason why you want to subtract all of the news and all of the noise and all of the politics with the market is because there is a agenda depending on which media outlet that you're listening to. Are they leaning to the left? Are they leaning to the right? What is their motivation? Although it is important to watch both sides so you can understand or try to understand what the opposite party of your political beliefs are, to try to understand what people think and how it moves the market, but it doesn't matter because we're going by technical analysis to make money. We are currently looking at a one-year chart, a daily chart. Each candle represents one day. What we are looking at, the white line is the 10-day moving average, the purple line is the 21-day moving average, the green line is the 50-day moving average, the orange line is the 100-day, the red line is the 200-day, and the teal line is the 300-day moving average. Typically in a bull market, the market will hang around at the 10, the 21, and the 50-day moving average. But we have been in a major correction, and we are going to take a look at some of the technical analysis to see exactly what's going on with the market and when is a good time to get in. We're going to set up some support and resistance to see exactly what's going on with the market. We go to the 52-week high of 45,073.63. That's going to give us resistance going forward. This area here is going to give us resistance also. That's the 42,821.83. That's going to be resistance. And as you can see, this area here, this acted as support. As you can see, when it came into this area, it bounced out. Now we breached it here and we breached it again, but now we're back up over this. And this should give us a level of support. So we're going to get a little more granular. Let's get a little bit closer here. As you can see, the 300-day moving average was hit here, and we have some volume starting to come in here. The indice gaps up, then we pull back on Friday, pretty substantial. Everybody's starting to get a little nervous. But if you look at the volume down here, was really not that significant. So today proved to be a very positive signal. As the market goes all the way down, as you can see, the volume is starting to pick up and the market pushes all the way down, but then it closes up at the high. Now we are currently going to be sitting at this range of 42,000. Our next stop should be 42,821. Now, can this pull back more? Absolutely. But right now the market's saying that it wants to go into a bullish phase. But of course, we all know that with the news, depending on what the catalyst is and how the market wants to determine it, is going to be a determining factor if this market is done with its downdraft. I think it's going to take some time before it reaches the all-time highs again, and it probably is going to stall in this area right here. But I currently am very bullish on the market. This is a significant downdraft. These are buying opportunities for long-term portfolios as you manage your portfolio and you buy on a weekly, a bi-weekly, and a monthly basis. Over time, that has proven to be a very, very lucrative strategy. So forget the noise. You want to do your due diligence. You want to respect the process. Dot your I's, cross your T's, and don't forget the Z, because it can be a little confusing at times. Thank you for following us on TikTok. We appreciate your love and support. For more analysis, please subscribe. God bless and happy investing. Thank you.